Hi everyone, welcome to Dr. JJ's Virtual Academy of Commerce. In this video, I am going to deliver a lecture on the topic Advantages and Limitations of Management Accounting. These are all a few details related to me. After you watch the full video, if you find the video useful to you, give a like to the video. Kindly do subscribe my channel and enable the notification so that you will get the notifications of my new videos on commerce and management topics. Let's get into the topic. Advantages or merits or uses of management accounting. Management accounting is of immense value and utility for the management of any business enterprise, and it has been considered as indispensable, particularly in large organizations where the task of management is complex in nature. Let us look at the advantages of management accounting in detail. The first advantage of the subject is increase in efficiency. Management accounting contributes significantly towards increasing efficiency in the operations of a firm. The techniques like budgets, standard costing, reports, taxation usually elevate the level of performance of the personnel who involve in the preparation of reports to be submitted to the management in the name of management accounting. Second advantage of management accounting is effective planning. Policy formulation and planning of operations become more effective through the decision data provided by the management accountant. Obviously, the information which is financial and non-financial of nature generated, analyzed and presented by the management accountant eventually support the management for effective planning of its operations. The third advantage of management accounting is performance evaluation. Management accounting, through its tools like standard costing, budgets, control ratios, it paves a way for evaluating the performance of the people who involve in management accounting. And the next one is about evaluation of performance of the centers named cost centers, profit centers, responsibility centers and investment centers, etc. The fourth advantage of management accounting is profit maximization. Of course, maximization of profit is the foremost objective of any business enterprise. Management accounting is really helpful in profit planning to pursue decisions which can optimize or maximize profits of the business enterprise. The fifth advantage is named reliability. The tools used by management accounting usually make the data supplied to the management more accurate and reliable. It's because of the scope of management accounting through which it very well makes use of the information of financial accounting, cost accounting, revaluation accounting, statistical techniques, etc. The sixth advantage of management accounting is the elimination of wastages. Standard costing, budgets, cost control techniques, etc. contribute significantly towards the elimination of wastages, production of defective products, etc. The seventh advantage of management accounting is nothing but it facilitates effective communication between one another who are working in the organization. Regular and systematic reporting ensures constant flow of information about the operations to the various levels of management. The eighth advantage of management accounting is employee morale. Morale of employees can be created and sustained through determining attainable standards, preparation of practical budgets, and tailoring incentive schemes which will definitely motivate the employees and keep up their good morale to perform much better in the days to come. The ninth advantage of management accounting is control and coordination. Control on cost and coordination the efforts of different segments of an organization can be achieved through performance reporting, variance analysis, and follow-up action done through management accounting. The greatest benefit of management accounting is its advisory role in making the management to take the best possible decisions on the day-to-day basis on routine matters, and also plays a vital important role in creating wonderful policies for the organization. Let's look into the details of the limitations of the subject management accounting. Though it is considered as an indispensable tool for managerial decision making, its recent origin and several external factors limit its effectiveness. The first limitation is nothing but dependence for basic records. Since management accounting derives the required information from the various sources such as financial accounting, cost accounting, and other records, its accuracy and reliability of the conclusions derived is really limited to the reliability of its sources of data. The second limitation of management accounting is personal bias. Of course, the data derived by management accountants from various sources have to be interpreted using the personal judgment of the management accountant and his team. So obviously, it provides room for personal prejudices and biases of individuals which can really affect the objectivity and effectiveness of the conclusions and recommendations done by them. The third limitation of management accounting is it's only a tool. It doesn't supply any decisions. Its role is of advisory nature. The fourth limitation of management accounting is what? It provides only data. So the job of the management accountant and his team is only to inform the management and not to prescribe the final decision to be taken by them. The fifth limitation of management accounting is broad-based scope. The scope of management accounting is really wide and broad-based. It depends upon quite a lot of sources to derive the required information and do analysis of the same. So limitations of the knowledge and experience of the management accountant and his team in such diverse fields including cost accounting, financial accounting, revaluation accounting, taxation, statistical techniques can make the data unreliable and undependable. The sixth limitation of management accounting is nothing but resistance to change. Installation of management accounting in an organization greatly involves a lot of changes to be done in the structure of the organization. The cooperation of the personnel of an organization is vital for the establishment of an effective management accounting system. If there is a resistance on the part of the employees or personnel of an organization for the installation of management accounting, it would be a bigger challenge for the organization to move ahead with the installation and use of management accounting system in its organization. The seventh limitation of management accounting is it's very costly to install. Since it requires a huge investment for the establishment of the system of management accounting in an organization, it is really not affordable for small enterprises to go for establishing a unique system of management accounting in their organizations. It is really affordable for bigger organizations to involve or to do a huge investment which is required for installation of management accounting. And the eighth limitation of management accounting is evolutionary stage. As I have already explained, management accounting is a subject of recent origin. As a discipline, it is still in its development stage. Its concepts are fluid. Techniques are still evolving and analytical tools are imperfect. There are several experts who are skeptical about the utility of management accounting because of such an important limitation. What is the conclusion? Most of the above limitations of the subject can be overcome with determined efforts on the part of the management and skilled management accountant. Therefore, it is really possible to overcome the limitations of management accounting if it is properly installed in an organization. I hope I have done my lecture up to your level of satisfaction. If you like the video, give a like to the video. Thanks for watching this video. Bye for now, everyone.